Welcome to the Coin Bureau Weekly News Roundup. My name is Jessica.
And my name is Guy. Here are the top stories in crypto this week.
Bitcoin ETF woes. Spot Bitcoin ETFs experience large net outflows, while Bitcoin miners and BTC whales start selling. How low could BTC go?
Ethereum ETFs imminent. Bloomberg analysts expect spot Ethereum ETF approvals by the start of next month. What does this mean for ETH?
Trump's Bitcoin bet. Presidential candidate Donald Trump pushes for all remaining BTC to be mined in the US. Why this isn't a good thing.
Biden's crypto redemption. President Joe Biden reportedly plans a pro-crypto event to sway the industry over to his side. When will it happen?
Fed doubles down. Jerome Powell signals the Fed will keep interest rates higher for longer amid softening economic data. Everything you need to know.
Concerns arise over OpenAI. Users question the AI entity's decision to hire a former NSA director, as well as its Apple partnership. Which crypto projects could it affect?
And a closer look at last week's top-performing cryptos and where they could be headed next.
All this and more in just a moment. Last week, the spot Bitcoin ETFs experienced some of their largest net outflows to date, totaling almost $600 million over just 5 days. The practical effect of this was that BTC's price fell because the ETFs are backed by actual BTC that's bought and sold according to demand. That's what spot ETF means. Now, the consequence of BTC sales by ETF investors was hundreds of millions of dollars of longs, that is, traders who bet that BTC's price would go up, being liquidated. As a result, hundreds of millions of dollars of BTC were sold, causing further price drops and liquidations. At the same time, on-chain analysis suggests that Bitcoin miners had also sold hundreds of millions of dollars of BTC, presumably to fund their more expensive operations after the halving. Some sources suggest the cost of mining 1 BTC is now as high as $83K, but it obviously depends on the miner in question. And if that wasn't bad enough, further on-chain analysis revealed that BTC whales who had not moved their coins in years had started sending their sats to exchanges, with one whale reportedly sending 8,000 BTC worth over $500 million to Binance. It stands to reason that they were intending to sell. And yet, this sell pressure, which easily exceeded $1 billion, only caused BTC to fall by around 5%. This underscores the fact that the average BTC holder continues to accumulate, despite selling around the margins, something further supported by on-chain analysis. Many other BTC whales are buying. Moreover, if you zoom out, you'll notice that BTC has basically been trading sideways since last February, bouncing between around 61 and 72K, with occasional deviations below and above these key levels. So long as BTC stays within this range, there's not much to worry about, but lots to trade. And if you want to try your hand at trading, then check out the Coin Bureau deals page to maximize your profits. It's got trading fee discounts of up to 60% and sign-up bonuses of up to $60,000 on the best crypto exchanges. Link in description. Now, speaking of ETFs, everyone is waiting for the spot Ethereum ETFs to be approved. To clarify, the spot Ethereum ETFs technically require 2 SEC approvals in order to list on stock exchanges. The first approval happened late last month. The second approval is expected to occur by the end of the summer. Although the end of the summer could technically be until the end of September, Bloomberg ETF analysts believe the approval could happen by the 2nd of July. This is due to a combination of feedback ETF issuers have received and the SEC supposedly wanting to get things done by the 4th of July holiday. Assuming Bloomberg's ETF analysts are correct, this means that a spot Ethereum ETF could be listing in, well, the next 2 weeks. So this begs the question of how high ETH could go off the back of these listings. Well, the approval of the spot Bitcoin ETFs took BTC to new all-time highs, so many believe it will be the same story for ETH. However, the answer with ETH is a bit more nuanced. As we mentioned in our recent video about which cryptos will get ETFs next, ETH lacks a concrete narrative that institutions could ape into, like digital gold for BTC. Not only that, but many institutions may be comfortable with just having BTC as their only crypto exposure. This is especially true when you consider the fact that the spot Ethereum ETFs won't be any different from the spot Bitcoin ETFs in terms of their qualities. For context, many of the spot Ethereum ETFs initially included staking. Removing ETH staking seems to have been a condition for SEC approval. Now that is a problem because the ability to stake ETH to earn a yield is a big selling point, particularly with institutions. So, ETH's lack of narrative, the relative risk aversion of large investors to crypto, and the absence of staking yield is why many, including JP Morgan, expect the ETH ETFs to have smaller inflows. The spot Ethereum ETFs could even experience net outflows in their first days of trading if they're launched at a bad time. Come to think of it, this possibility could even prompt ETF issuers to delay the listing dates or just let the SEC take its sweet time. It seems many crypto projects have done this with their milestones in the past. Thankfully, though, it looks like the market conditions could be perfect for a spot Ethereum ETF launch, and that's simply because of how politicized crypto has become in the United States. And by the way, if you're enjoying the video so far, be sure to thump that like button and subscribe to the channel so you don't miss the next one. Now, to bring you up to speed, US presidential candidate Donald Trump hosted a gala for holders of his NFTs in early May. The result of this was that Trump met with many prominent people in the crypto industry, and they seem to have convinced him that crypto voters are a cohort worth wooing for the upcoming election. Now, shortly after this event, Trump began making bombastic pro-crypto statements and policy promises. Many believe that this is why the SEC suddenly decided to approve the spot Ethereum ETFs. For reference, most Democrats appear to be anti-crypto, and the SEC's top brass are, of course, mostly Democrats. Realizing that cracking down on crypto could be losing them voters, the Democrats started pulling their punches, approving the spot Ethereum ETFs with one hand, but vetoing a pro-crypto resolution with the other. Meanwhile, Trump has continued doubling down on crypto, though he may be taking it a little too far. This is because he recently remarked at an event featuring the heads of the biggest Bitcoin mining companies that he wants all remaining BTC to be mined in the United States. At first glance, this is bullish because it underscores Trump's commitment to growing the crypto industry in the US. Upon closer inspection, however, you realize that the only way all remaining BTC would be mined in the US would be for all Bitcoin mining to happen in the US. This would result in extreme centralization of the blockchain, which, coupled with regulations around reporting, could easily threaten Bitcoin itself. And this highlights something that only a few people seem to be comfortable pointing out, and that is that neither of the two presidential candidates seems to know what crypto is. All they really know is that there are a lot of passionate people with a lot of money involved with crypto, and they want those votes and donations. That said, while Trump's support of crypto is likely partially influenced by his Made in America economic policies, the same cannot be said for Biden, whose crypto support is likely entirely political. I'll reiterate that the Democrat Party seems to be anti-crypto, as seen in almost every crypto hearing in Congress so far. The Democrats' sudden 180 is therefore very suspicious and reeks of political opportunism. Nothing stinks more than the news that Biden will now be hosting a crypto fundraising event in California. For those unaware, Trump had also recently held a crypto fundraising event in the state. What's funny is that many top-ranking Democrat politicians downplayed the significance of Trump's crypto fundraiser, but now they're frantically trying to organize one for Biden. Logically, this suggests that Trump's crypto fundraiser was significant after all and could be giving him some serious support. Now, Biden's crypto fundraiser will reportedly take place in early July, and this just so happens to overlap with the timeline that Bloomberg's ETF analysts have given for the final spot Ethereum ETF approval. If it's true that the initial approval was done for political reasons, then it's possible the second will happen around this event. And between now and then, Biden will debate Trump, specifically on Thursday, the 27th of June. As a fun fact, this is apparently the earliest a debate between two presidential candidates has ever been held. Many believe this is because the Democrats want to see if they need to pick someone else as a candidate. And if this turns out to be the case, then Biden may not be the one hosting the crypto fundraiser in early July. It could very well be California Governor Gavin Newsom, who is reportedly the runner-up if Biden bows out of the presidential race. Interestingly enough, Gavin appears to be somewhat pro-crypto. On that note, if you want to know exactly when we think the spot Ethereum ETFs could be approved, exactly when we think Biden could drop out, and other such predictions, then subscribe to our weekly newsletter. It's where we publish our weekly market forecast and other crypto alpha. Link is in the description. Now, when it comes to macro factors, the most important was the Fed's most recent meeting, which could have contributed to last week's downside volatility in crypto. What made this Fed meeting so significant was that it included a summary of economic projections, or SEP, the Fed's expectations. The SEP showed that the Fed only foresees one rate cut this year. To put things into perspective, the last SEP suggested the Fed was expecting 3 rate cuts this year. Investors were expecting the Fed to bring this back down to 2. Bringing it down to 1 was perceived as hawkish, and Fed Chairman Jerome Powell made sure it was. During his speech, Jerome was asked whether the slightly soft CPI that came in that morning had affected the SEP. All he said was that Fed members had the ability to change their interest rate expectations, but they didn't. Translation: we don't care, we're keeping rates higher for longer. This is eye-opening because even official government data is starting to show that the US economy is weakening. If you watched our video about whether a recession is coming, you'll know that some macro analysts believe it started last October. Keeping rates high will either make it worse or ensure that it does start. What's even more eye-opening, though, is how the Fed's hawkishness seems to have affected things like currency pairs and long-term interest rates. In terms of currency pairs, the Fed's hawkishness seems to have caused the DXY to rise. FYI, DXY up typically means everything else down, namely risk assets. In terms of interest rates, the Fed's hawkishness seems to have caused the 10-year yield to fall. Now, this is fascinating because falling 10-year yields are supposed to be bullish for everything, particularly risk assets. The fact that risk assets took a beating while the 10-year yield fell is a huge red flag for many traders. It effectively tells you that investors are expecting long-term interest rates to come down because of economic weakness. The rising DXY is further evidence of this, as it suggests that there's a flight to safety among investors, including overseas investors. This paints a bearish picture for the economy. The catch is that the economy and the markets are two very different things. Whereas the economy deals with the here and now, the markets are forward-looking. In plain English, their price action reflects expectations of what will happen in the future, and these expectations typically involve money printing. The caveat, though, is that even the markets are starting to look wobbly. This is just because most of the market action we've seen over the last year or so has been the result of the AI narrative. To refresh your memory, the AI narrative began when OpenAI released the ChatGPT chatbot back in late 2022. Naturally, this has made OpenAI one of the companies at the center of the AI narrative. Even though OpenAI isn't publicly traded, its actions have had indirect impacts on both AI stocks and AI cryptos. Look no further than founder and CEO Sam Altman being fired or resigning or whatever last November. Now, if you watched our video about OpenAI, you'll know that it's a bizarre blend of a private company and a non-profit valued at a whopping $86 billion. According to recent reports, Sam is now looking to turn OpenAI fully private in a move that could very well result in an OpenAI IPO at some point. OpenAI has also added a former NSA director to its board in a move that NSA whistleblower Edward Snowden is calling a, quote, willful, calculated betrayal of the rights of every person on Earth. As most of you will know, Edward was the one who revealed that the NSA was spying on everyone. Given this fact, OpenAI adding an NSA director to its board raises an eyebrow, and it raises both when you realize that OpenAI is now helping Apple with its AI. Many believe this integration could be used as a backdoor by OpenAI to spy on Apple users who currently enjoy some of the best privacy out there. Now, believe it or not, but this is extremely bullish for AI cryptos. On the one hand, it's bullish because if OpenAI does go private, then it will definitely be looking to IPO at some point. At the very least, it will give the company more freedom to integrate. Both of these catalysts would take AI cryptos higher. On the other hand, meanwhile, these OpenAI developments are bullish because they're making it clear to everyone that centralized AI is not the way to go. Centralization inevitably results in corruption, and some would argue we're witnessing it in real time. Never mind that decentralized AI is becoming more advanced. And with all that said, it's about time we looked at last week's top-performing cryptos. So, Jessica, take it away.
Thank you, Guy. Well, last week's top-performing cryptos were Uniswap, Toncoin, Oasis Network, Notcoin, and Lido Finance. Starting with Uniswap, its UNI token appears to have rallied due to the DEX's deployment of the ZK Sync Layer 2. As you can see, UNI has been struggling to get above a key resistance zone around $12. A rejection seems likely, particularly given that Uniswap Labs recently hired another lawyer in possible preparations for an imminent SEC lawsuit. Next up, we've got Toncoin, whose Toncoin appears to have rallied due to the explosion in the GameFi gains on the Telegram-related Layer 1. Ton continued the multi-week rally that we have been tracking recently. It looks like it could rally as high as $10 before correcting, though the recent rally to $8 could have been a local top, depending on the broader crypto market conditions. As for Oasis Network, it's not entirely clear why its Rosecoin pumped. Our best guess is that it had to do with the recent livestream that featured Polkadot, Flare Network, and other prominent crypto projects and companies. What is clear is that Rose's price action isn't looking too promising. It seems to be painting a head and shoulders pattern that could take its price significantly lower. This pattern will be invalidated if Rose can break above 15 cents and maintain that level. When it comes to Notcoin, the Not token appears to have pumped due to the aforementioned GameFi craze on Toncoin. FYI, Notcoin is a game on Toncoin. Similar to Rose, Not is looking too bullish. It could be in the process of painting a double top pattern, which could take it back to the lows prior to the recent pump. Just be aware that newly launched cryptos have a tendency to rally more than you would expect. Finally, we have Lido Finance, whose LDO token appears to have pumped due to a website upgrade. If you look at LDO's historical price action, you'll know that it tends to follow a peculiar pump and dump pattern. If history repeats, LDO's current dump pattern could last for another few weeks, consistent with the possible weakness in the broader crypto market. If you want to know which cryptos are pumping in real time and also where you can trade them, be sure to check out the Coin Bureau Insider Telegram channel. The link will be down in the description.
And that's all for today's Coin Bureau Weekly Crypto Review.
If you enjoyed it, then you know what to do. Hit that like button, subscribe button, and bell icon too.
Don't forget to check out our deals page where we have massive trading fee discounts and sign-up bonuses of up to $60,000 on some of the best exchanges, only for the viewers of this channel.
Also, if you do want to pick up some snazzy crypto merch, the Coin Bureau merch store has you covered.
You can find the link to that resource and many others in the description below.
Thank you so much for watching, and we'll see you all in next week's episode.